Hey, welcome to the Closing Beat, everybody. Happy Monday. Hope you had a good time while I was gone there. Maybe a little bit rusty, but if you're just joining us for the first time, this is our stock market update show. We just do a quick update to let you know how things have gone for the day, the good, the bad, and the ugly, give you a heads up as what to expect, and maybe share a few facts and things along the way. We're financial advisors here at Jazz Wealth, and we just find it's an interesting way to keep everybody in sort of touch. We started by doing this for customers and said, well, hey, I mean, let's do this for the public and see what people think. So far, you guys seem to like it. We also do weekly classes for our customers that are private for them. This week's will actually be live, right? So we're going to do it publicly so everybody can participate. If you want to see what it's like to be a part of a class here at Jazz Wealth, we're going to do that one live Thursday at 8 o'clock, just like we always do for customers, but this one will be public for you. And so that's all the marketing I have for that. If you want to join us, we're going to talk about trading strategies for the active traders there, really sort of get geeky in there, and got a special little treat for our customers if you guys are interested. So that'll be Thursday at 8 o'clock. All right, we're playing a game. It's called Guess the Dow. If you go to the website in the bottom right-hand corner of your screen, no strings attached, no purchase necessary, all that good stuff, no spam and marketing. Just go guess the Dow. Where do you think the Dow is going to close for the following week? And if you're the closest, without going over, we'll send you $100. And if you're one of our customers, we will credit your account $100 if you'd like, or we'll send you the $100, either way. So last week's winner, I wasn't here for Friday. Last week's winner was Radika. We've already alerted Radika that they won. They guessed 27312.5. They were the closest without going over. So every week we like to sort of do that. We'll announce this week's winner, of course, on Friday, if you want to join us for that. All right, let's get to the stock market, because that's really what we're here to talk about. We've got the Dow higher by 26. The S&P really did nothing for the day, and the NASDAQ higher by 14. We were lower most of the day. We finished positive on the day just by a little bit. Tentative would be the word of the day, right? If you were saying, well, how'd the markets do today? Tentative, right? Is that the right word? So we got earnings season starting here. And so investors just kind of want to wait, see how earnings season goes. Now, it used to be, a little history lesson for you, it used to be that Alcoa, symbol AA, was when we would say earnings season started. There were always a few earnings before that, of course, but we would say Alcoa's reporting, thus earnings season is beginning. Well, a couple years ago, Alcoa spun off part of their business. It used to be a Dow stock. And so they pushed back their earnings date about 2 weeks now. So they're no longer the start of earnings season. So we need something to kind of kick off earnings season. So we always say Citigroup and Goldman Sachs, the big banks, when they start reporting earnings, then that's when we say is sort of the unofficial, like, yay, let's get excited about earnings. On the flip side of that, Walmart tends to end the earnings season. Although there are still other retailers after that report and a handful of other names, Walmart is sort of like the final grand finale of earnings season, again, in an unofficial sort of way that traders, like to pay attention to. So there's your lesson of the day, or at least one of them. I got a lot of them. So this earnings season, we're going to be focused on tariffs. How often do companies say that tariffs in China become an issue, or are maybe becoming an issue for them? So I think that'll be the focus. You see more action or volatility on a particular stock as the conference call is going on. Of course, we're looking for revenue as well. We're looking, just like last season, we're looking for revenue here. So we'll keep track of that. We'll follow along with you on that one. We got the big banks reporting tomorrow. Citigroup reported today. They beat on earnings. Everything looked pretty good there. But the big banks are reporting tomorrow, like Goldman Sachs, JP Morgan, Wells Fargo, and the like. So we'll cover them. Remember, banking stocks are currently undervalued. We did a class for customers a while back, overpriced versus overvalued, what that means and all the good stuff. Giving you exact examples, the banking sector is currently undervalued to the tune of where it hasn't been in like the last 10 years. So it's really sort of undervalued area, but overall doing pretty good. Let me see if I remember how to do this. Hey, all right. So if we look at the XLF, this is just kind of the big banking ETF that I like to use to look at the sector there. I get it. They have like Berkshire Hathaway in there as well, and that's not really banking, but for the most part, these are your big banks. Lately, they've started to participate a little bit. So investors seeing that value, seeing the potential there, this earnings season is going to be huge, I think, for financials. Not saying they're going up. I just mean in terms of, will people now come and buy this undervalued area, move some money out of tech and consumer staples, et cetera, all the sectors we've talked about, or will it just continue to float around? Remember, you need the banks to rally if you're going to have a really substantial market rally. This sort of slow grind up is helpful. Of course, summertime, low volume activity, nobody's complaining. But if we could get some real support behind the banks and get that sort of sector rotation, at least a little bit into it, I think that'd be great. All right. Hey, here's something interesting for you. A company reporting earnings tomorrow, Canadian Pacific, CP. For the last 10 quarters, they have beaten on earnings. And for the last 10 quarters, it has gapped higher by about 1.2%. So we dug a little deeper, went into some different names here for my active traders. SkyWest. Oh, I typed it wrong. SkyWest. There we go. They don't report until the end of July 31st to be exact. They have also gapped higher 10 times in a row for the last 10 quarters, an average of 5% though. So if you're looking for those active stocks that move on earnings, there's some that have a good track record, but also are very active for earnings. KB Homes is another one, by the way, gapped higher on the last 10 earnings announcements by an average of 4.5%. If you're a contrarian, you want to look on the downside, I don't know. This is kind of a tough one here, I think. But GameStop, I think you get why, but GameStop has gapped lower 9 out of the last 10 earnings seasons and almost hitting a new 52-week low there. Average gap lower was almost 10%. So this stock really takes a beating, at least over the last 10 quarters there. A couple other names we'll do, and then we'll move on here. Hormel has also gapped lower 9 out of the last 10 quarters. Goodyear, which is GT, if you like that sort of thing. Same concept there, just some beaten down areas. Colgate Palmolive, if you like playing that one, also has gapped lower. Interestingly, still nice and little uptrend there. And Pfizer was the other one. I don't know if you're interested in this stuff. It's just things that I know some active traders like to sort of surround themselves around during earnings season. And we don't always point out things like this, but since it's earnings, we'll take a look. All right, so the S&P 500, what is the expectation of analysts? Have they set the bar high or have they set the bar low? Meaning, do we expect companies to beat by a mile on earnings and maybe we'll be disappointed? Or have analysts said, no, we don't think things are going to look very good, and thus companies may be able to beat or surprise to the upside? Well, if you look through all the analysts that cover the stocks in the S&P 500, they average that, or they're saying that earnings will be lower by about an average of 3%. So in other words, layman's terms, they lowered the bar, right? They lowered the bar pretty good for this earnings season. So we went back and looked and said, well, how many other times has the bar been set lower than where it's currently set? And what happened after that? So since the start of the bull market, you go to late 2000 or early 2009, there's been 7 other earnings seasons where analysts have lowered the bar by this much or more. So we're trying to find comparables here. And interestingly, the S&P averaged a gain all but one time out of the 7. So 6 times out of the 7. The time that it did lose, by the way, it only lost 0.25%. All the other times averaged a gain of about 4%. So that tells you that when analysts set the bar low, even if we beat by just a penny on earnings or a little bit on revenue, that the markets respond to that. So a very favorable sort of data point if you're interested in that going forward. Remember, last earnings season, when stocks reported their earnings, we saw a lot of gaps lower. We saw stocks get beat up just for missing by a little bit or matching estimates. They got beat up. More stocks sold off than actually gapped higher. So we'll see. That was sort of a record that happened last time. So we'll cover all of it. I'm just giving you sort of the foundation here. Also, all eyes on the Fed. I guess while I was gone last week, you had Mr. Powell all but confirm that, yep, we're going to cut rates. Well, he didn't say. I mean, he just gave all the sort of fluff talk that makes you realize, oh, maybe they are going to cut. And so now you have almost everyone, and it's just safe to say, everyone expects that the Fed will cut rates here at the end of the month. You now have 27% of all investors that think they're going to cut by 2 cuts, or in other words, 50 basis points, or lower interest rates by 2 ticks. Usually they raise by a quarter or lower by a quarter. You have 27% assuming that they're going to lower by a quarter and then go another quarter. That seems odd to me. I don't think that would be the case, but it just shows more and more people are thinking, hey, maybe it's more of an insurance cut. If you're familiar with the Fed and how they do what they do, maybe they would go 0.5 point and then give it more breathing room just in case. I don't think the data supports that as far as economic data. I could be wrong. We'll see. But just 2 weeks ago, there was only 5% of the people that were expecting a double rate cut. So if that helps you there in any way. I know it's sort of like geeky talk today, but I've been gone for a while. I'm excited to share data with you. Okay, so the S&P 500 is now up over 20%. Is that good or bad? Remember, I always tell you guys and tell customers, if someone lays a statistic on you, if they say my stock is up 10%, if they say I bought something and I gained 20% or the market's up 20%, you always want to ask, yeah, but what does it matter, right? Is that a good thing? Does that mean we're near a top? Does that mean that your stock gained 10% and that's just sort of an average and it could do a lot better, right? That's what you want to ask, these sort of weird questions like that. Well, there are 9 other times in history where the S&P has been up 20% or more at this very day, right? This moment in time, meaning from the beginning of the year till right exactly now. And I debated sharing this with you really because it's not all that interesting. There's an exact 50-50 chance that the market will be positive or negative at the end of the year. I'm sorry. We do a lot of studies, and I just sort of like to share the really interesting ones, but this one's come up a lot. People say, hey, we're up 20%. Do you think we're going to be up 30? You think we're going to be up 40? Well, we've gone over this with customers and the exact sort of data points to show how often markets gain what they do and how often they lose what they do. But you have a 50-50 shot of the market being higher than this point or lower than this point by the end of the year, given what, the market's history being up 20% at this point. I thought it was kind of interesting that anytime the market was negative, so 50% of the time, when the market was negative, the gain at this point was higher than 27%. That's pretty extended. If you follow the S&P, a 27% gain would be rather extended year to date at this point. Right now, we're only up 20%. All the positive returns at the end of the year, the other 50%, were when the market was higher by 21 to 23.75%. So right in that sweet spot that we're in right now, which means you can sort of see the S&P is extended when it gets close to 30%. That's sort of a rare return that you're going to see the markets give that much, and thus a pullback seems normal, right? It was a big gain, people take their profit. But when we're only up 20%, people still stick around. They stay in the game and maybe buy a little bit more, feeling a little bit left out, and so the market's finished positive in that case. Yeah. So, all right, I know, too much. Let's go on. So in the S&P 500, you got 82% of the stocks above the 50-day moving average. The financials continue to be the biggest sector they continue to be the sector with the most amount of stocks over the 50-day moving average, and there's people interested in buying it. So I thought I'd point that one out as well. I know we talked about it a second ago. Looking through some of the sectors today, you got semiconductors hitting the top of the list, but notice off to the right, nothing really crazy. You don't have a big gain across the board, and you don't have a big loss across the board. You have sectors sort of just floating around, waiting for earnings. Remember, XLV was that golden cross move from the other day, and I said don't really count on it being a huge move. And then Trump was going to have some sort of executive orders. He backed down from that, by the way. I thought that was interesting. But so not much today. Sector-wise, very quiet, calm start to the day. You got 66 new 52-week highs. That's pretty good. Most of these stocks, by the way, are all in solid power trends, meaning they're very tight and controlled uptrends with not a lot of volatility to the upside or the downside. That's important to note. I would point out, like I did before I left there, ICE maybe seems a little extended. That was one of the ones that made new highs today. Walmart maybe seems a little extended in the short term. TJ Maxx, maybe, if you like following this sort of thing, little extended in the short term. So just all it means is if you hit 52-week highs today and you're a little extended, you could understand if there was a bit of a pullback. I'm not saying to buy or sell the stock or anything. You just understand it. It'd be normal if it fell for a few days and nobody would panic. All right, Molson. This is Coors, the beer company, symbol TAP. It gapped down a new 52-week lows today. It was a double downgrade by Bank of America, meaning they went essentially from bullish to bearish all in one shot there. They have some concerns about how Molson is spending their money. We've got Schwab in the news today. Well, they have earnings tomorrow. We're expecting 66 cents a share. It was a rather volatile day for this one, mostly because they're buying USAA's investment management business. If you have a USAA Roth IRA or traditional IRA or whatever, Schwab is coming in and they're going to go ahead and buy that. I'm a big fan of that happening, by the way, because USAA is the second hardest company to transfer your account from. So I don't mean to pick on them, but if you open an account here with Jazz Wealth and then you call me up and you say, hey, I have a USAA Roth IRA. I'd like you to transfer it over here to Jazz Wealth. Oh my God, it's so painful. Like, they are so difficult to deal with when it comes to that. They have so many different avenues you can go down. So I'm more than happy. Charles Schwab is a great company. They're easy to transfer accounts away from. They don't give you any grief. But anyways, that's the reason for the volatility today. If you happen to be paying attention, expect more volatility tomorrow because you got earnings coming out, and that'll be before the market opens there. Let's take a look at Zoom. So this company recently went public, had a great day. 7% gain on the day. Remember, they actually make money. There's a string of IPOs that have come out. They don't make any money, but yet everybody's buying the stock. This company actually makes some money. So a big pop there for Zoom if you're paying attention on that one. Bitcoin was a little volatile today. You happen to play around with Bitcoin. You had the Treasury Secretary come out and he wasn't like all negative about crypto, but did have some concerns about terrorists using it and not being sort of happy with where Facebook's at with their coin at the moment. So a lot of volatility there. And I know you had Trump commenting about, not liking Bitcoin and stuff while I was gone. So the volatility continues. And I will take your questions now if you happen to have any. We do the questions here in live on YouTube, so we could go ahead and just answer any questions if you happen to have them. From my understanding, tomorrow or maybe the next couple days, we're going to be live on Roku. That's pretty cool. I'll keep you posted, but I'll take your questions. Hey, before I take your questions, how many of you are going to raid Area 51? Huh? There's like 1 million people that say they're going to go raid Area 51 to go see what all these aliens are doing there. I'll give you a hint. The aliens aren't there. If you're an alien person, that's not where they're at. But anyways, I think it's interesting because if 1 million people can organize online, it's like what just happened in Hong Kong. If we all realize that by organizing we can affect change rather than fight about change, then what difference can we make with taxes, healthcare, things like that, right? I think it's sort of exciting that people are now realizing after all these years of the internet, wait, we can get together and get fired up about something and all join in. I get it. The Area 51 thing's kind of a joke, but I hope some people start to realize that. All right. The TSP is painful. Not so bad nowadays, the TSP. The form is not as easy to figure out, but I help everybody with that one. That one's not so bad. USAA is difficult. The other one that's really difficult is T. Rowe Price. And it's not because they're bad people. It's just every position you have has an account number. And so you have to guess which one to get to transfer the whole entire account. It's a tough one. Your college started using Zoom. Yeah, no, I mean, I know Zoom is really, really, really popular, and well, because of that, they make a profit. So that's a good thing. If you're a public company, you should have to at least be on the path to making a profit. Yep. I know financial investors saying, yeah, doesn't cash get used to fund terrorism? I totally get it. It's a funny, contradictory approach there. I don't know. I don't know enough about crypto to say it has a worth in this world. Until people realize that they can use it to exchange, like in a broad way, they can use it to exchange for gifts, products, things like that. I don't see why people would use it, right? It's got to be where I could literally just like take my phone or I've got my card or whatever and I can make the transfer easily to buy groceries or something. Then you have an argument for a currency there, but I get it. Right now, the rich people use it for like buying cars or whatever. And I don't know. We'll see. We're going to be here. We'll watch it. So why are the semiconductors rallying up? Slow rally, right? So you had that big discount, just like everything else there when the market sold off. Through May. I mean, it sold off more than the markets, but you've had that slow and steady rally. This was one when we hit that bottom there. I was saying, don't expect this to be a V-shaped rally where we go back to highs. It's one of those stair-step rallies, and that's because not only is it a fundamentally driven sector, news as well. There's been a lot of news in there. One day everything's great, the next day everything's scary. It's tough. Yep. Organized for higher IRA contribution limits. I agree, man. Let me put 20 grand in a Roth IRA, right? So you own Target, and the question is, man, should I sell this thing? What should I do? I know earnings is not for a while, if I'm right. This is one of the later ones. They just reported earnings here. So you really have some time on this one. Notice how nothing's happening at the moment. Anytime a stock is not doing anything, there you go. So anytime a stock moves sideways on you like this is where you really got to measure, do I want to keep this stock or not? Do I have a profit, and should I put that profit towards something else? Not because it's a bad stock. It could consolidate like this for a while and then break out again, but you have money sitting there. Is your money better off growing elsewhere? If you're an active trader, which I'm guessing you're more of like a swing trader since you said 90 days, if you're allocating a percentage of your account towards one position and that position stops moving, would it be better to take the risk on another one, or should you sit and wait it out, right? This is where I start to lose patience. And if I were suggesting anything or being a swing trader in this case, let me say it like this. If I were pretending to be a swing trader in this case and had this position, I hope that's good enough, I would be slowly saying, okay, if it falls to like 82, I'm going to go ahead and get out. And then after a few more days, okay, if it falls to 83, I'm going to get out. Hey, it's not doing anything for me. All right, if it falls under this range here, I'm just going to get out. And I would tighten the noose on this thing personally, just because I'm a big believer that if it's stale money, you can always come back to it, but why let your money sit stale there? It's costing you money. If you're trading on margin or whatever, that's costing you money as well. Yeah. The notes at the bottom say no closing beat. It may not have updated yet. I don't see it. Any opinion? No, I don't follow any of that, by the way. Any of the biotech stocks, that no matter how deep you go into that category, I don't follow them. I don't like them. I don't like the news events that sort of cause the big moves. I don't like the idea that I could wake up and either have a 50% profit or a 50% loss on a position. That's scary, especially with the smaller, low volume ones. Any restrictions on Roths and HSAs in the same year? I'm assuming you mean contributing to each. No, they're independent of themselves. They stand on their own. Yep. You got it. Well, hey, I'm glad I got this done here. I was actually figuring I'd be a little bit rusty. Before I go, we talked about Canadian Pacific reporting earnings tomorrow. Dr. Pepper Snapple expecting $2.03. Goldman Sachs, which, by the way, Goldman Sachs, they don't miss on earnings. Let's see, they missed once on earnings. This is a machine. These guys know how the game is played. April 2017 was the last time they missed on earnings since 2012. Right? 7 years, almost exactly. So, revenue is the focus on that one, in case you're wondering. Wells Fargo, Schwab, JP Morgan, Johnson & Johnson, CSX reports tomorrow. And then after the close, you have CSX after the close, and then you have United Airlines. Just a couple other things for you. Oracle paying out 24 cents dividend there. That's a good one. We own that one here, so more dividends to add to the pile. And if you're an S&P index replicator, builder, you like sort of playing with the index, T-Mobile is going to be replacing Red Hat today, actually. Today's the 15th. Yeah, so replacing Red Hat now that they're bought out. So that's the end of that one. Boeing, you've got the 737 jets pretty much down until next year now at this point. American Airlines has also moved their date back to November. And so we'll see. We'll see. That's pretty much all I have for you. I will begin to wrap it up. Should you panic on Netflix? I know Netflix sort of teased you and hinted that it was going to break out. I don't think you're going to see much of anything happen until earnings, which are coming up. So not a reason to get excited or really panic. I think everybody's just going to sit there and wait for earnings. Facebook fined $5 billion. You're right. Yep. I saw that today. A lot of people were saying that fine was low. Not by me and you on Twitter or whatever, but a lot of people from the analyst side of things saying that was a little bit low. They expect that to be raised when it's all said and done. I'm still catching up. Cool. Yeah. Netflix. Oh, boy. Oh, what did I say? No. T-Mobile replacing Red Hat in S&P 500. Yeah. I might have said something wrong. Sorry. Opinions on Facebook. Yeah, it was pretty flat today, considering, the news and everything, down about 0.5%. That rally that's taking you back to 200 there, it's impressive. That's a tight little consistent rally. So, I don't know if there's any reason to argue. If you're a bull and you've owned the stock and you weathered that last pullback through May, you're not too scared anymore. I think you're pretty happy there. If we go back even further, your next resistance area is up towards 210, 215-ish, right in there. So again, you got earnings. That's going to be the caveat for every single comment here is earnings, earnings, earnings. If you notice your stock is starting to slow down and not do a whole lot, well, you can guess that everybody just wants to wait and see what earnings are going to be like. Yep. Okay, that's it. I've done it. I'm going to wrap it up there. We'll be back tomorrow, of course. And then don't forget, if you want to join us for a live class Thursday, we're going to do it just like we do for customers. Probably going to move over there and use the Blackboard and everything for you. But we'll publish that live at 8 p.m. On the YouTube channel. Hope to see you there. And if you're one of our customers, we'll send you the email invite and maybe a special, if you guys like your spreadsheets and geeky stuff, I'll be sending that out as well. Have a great rest of your day. Thank you so much for watching. If I helped you in some way, maybe hit the thumbs up button. If you didn't like it, thumbs down, but you're not supposed to say that. It's like, you could just thumbs up, really helps. All right, see you guys later. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.